Hey everybody, Real Estate Ninja here. I hope you're doing great. Got a great story out of Kiplinger.com and it's entitled Real Estate Investors Retreat. We're going to talk about that. First, I want to ask you to take a look at the link to X, or formerly known as Twitter. Follow me there. I'm going to start putting a lot of original content on there. We're going to start shifting things. We're going to keep running the algos crazy on YouTube if it works. If it doesn't, well, we're switching. So go ahead and take a look at that. Also, today is the last day that the 80% off link will be available on any of these videos for the real estate crash course. If you want to prepare, you want to know when the trigger points are there, when to get in, when to get out, and how to spot those time points, very important. Take a look at that link. All right, here we go. Real Estate Investors Retreat. Investor home sales in Q2 fell sharply from a year ago, Redfin reports, as the mid-pandemic housing frenzy continues to cool amid higher interest rates. Now, it's really interesting because so many investors that are investing right now in deeply in debt became investors after the Great Recession. They have only known one thing: cheap, easy money. Oh, sorry, two things. And well, it's cheap because of the second, low interest rates. And they don't understand what it's like to switch. Now, I've been an investor for a long time and I know what it's like, what it feels like. And there are a lot of homeowners that I talk to right now that it's night and day. They say they wish they would have sold in the spring. They really wish they would have sold even earlier than that, because right now the damage has been set. Mortgages at 7+% is just too much. Insurance premiums are exploding if you could even get insurance at all, okay? But now let's talk about the investors, because those investors have been all over YouTube, all over social media saying how much money you can make and buy my course to make all this money in real estate, when they're actually selling people a bill of goods that's just no longer relevant, because we have now turned. The tide has shifted. All right. Says right here, as the housing market hits a standstill, real estate investors are buying fewer homes than last year, although home flippers are still making money on deals. That's interesting. Investor home purchases dropped 45% in the second quarter from earlier this year. Now, think about this. Investor purchases make up a large amount of the real estate transaction volume around the country. To say that it has dropped by almost 50% is unbelievable. It's amazing, right? Why? Because so many investors have been priced out of the market. There's not a large enough margin. And remember, Airbnbs and vacation rental companies are being banned around the country, little by little, from large metropolitan cities like Dallas, places in New York, and so on. There's fewer investors that have the ability now to buy the property and set it up as an Airbnb throughout the country. And this trend is going to gain a lot of speed, traction. If you think about this, people are fed up with Airbnbs. And we've never even had this issue in and of itself. In 2008, the 2008 crash, we didn't have it. So that was a big portion of real estate that got sucked up and was taken off the rental market, the long-term rental market, for quite some time. And we're going to see that flip. All right, it says here, investors, home buyers who intended to either flip or rent out their properties have been more reactive to the cooling housing market than individual home buyers. Investors scooped up a greater share of properties during the 2020 to 2021 frenzy than other home buyers, and were also quicker to retreat once the market cooled. It says here, other factors contributing to the decline in home sales include interest rates. We all know that the interest rates are going bonkers. This is the fastest, steepest spike in interest rates that the Federal Reserve has set it upon themselves to raise these rates in modern history. So this is unlike 2006 to 2008. Sellers are holding steady. It says homeowners and investors locked in record low rates during 2021 and 2022 and have less incentive to sell currently. Well, that's actually not true. I did a video that got extremely low views. It blew me away on the Economic Ninja channel, and it was referring to the sheer amount, the percentage of mortgages that are adjustable rate mortgages. And it showed that as of April of 2023, homes or mortgages that were priced at $1 million and above, 45% of those were adjustable rate mortgage. Think about all the fake millionaires out there. They can't even get a fixed rate mortgage to make it look like they're Daddy Warbucks, right? The percentage of homes that are adjustable rate mortgage from the price range of $400,000 to $1 million, 17%. And to give you an idea of how big of a deal this is, at its peak, during the run up to the 2008 great financial crisis, right? The housing crisis, the Great Recession, The percentage of adjustable rate mortgages equaled 18%. 18%. Now, when you look at all home loans right now that are adjustable rate mortgages as of April of 2023, guess what percentage? 18.9. So as of right now, and that video got such slow views. I don't know why the algo didn't want to share it. It just blew me away. But when you start to see these trends, when you start to look at these percentages, the percentages do not lie. Investors are running away at the tune of 45% of them right now. They're not buying anymore. We're seeing the largest home owner of institutional home ownership. They're net sellers this year in 2023 of homes. Why? They know this bubble has popped and it's going to go down really quick. That's why I wrote the course. That's why I wanted to give you the edge, an unfair edge, because most people, when they write courses on real estate, they show you how to make money in real estate. Well, I show you that too, but I show you that the money you make is when you make the deal. And I want you to buy that home at a depressed price. And that depressed price is coming soon. Do you want that edge now or do you want it later? The question is this. Answer yes or no below. Do you wish you would have had that edge to know when to buy? Or first off, when to sell your property in 2006, and then when to buy between the years 2010 and 2012. You would have saved yourself a lot of money, but what that money saved is actually money earned the day you sell your house. Why? Because your margin is larger. That's why I think that course is so darn important. And I don't want to preach my own, I mean, it's just, it is what it is. It says here, housing supply is drying up. Total listings fell 9.1% year over year in July of 23 with less inventory available across the board. This is what they're not telling you. It dried up because everyone's broke. Everybody got into a house, they are prisoners in their own home. Yeah, they have a lower rate. But even if rates were lower today, like what they are now, with the added cost of tax, the higher price of the home, and insurance, nobody could afford to sell their home and move to the next door one. So they're literally in a prison, locked down by a job that they may be losing soon because, I don't know if you've checked the unemployment numbers, they're rising. And Bidenomics is not working. Now, lastly, it says here that home prices are still rising. This is actually not true, but there's different metrics for this. The median home price for investors last year was $467,885. This is what they're bragging about right now. This year, it's $470,120. Now, remember, with home prices, the home in your neighborhood is only worth appraised value, what the last one sold for. Now, there's a handful of other metrics, but by and large, it's just like the stock market. If you're buying and selling Apple shares, the price that you see on the ticker, whether it be a green or a red arrow with a percentage loss or gain, is based off of the last order that went through. No matter what the size, it could have been one share, it could have been 1,000,000 shares. That's what gives its price. And so because a lot of fools, and I do say that honestly, rushed in because they were experiencing fear, uncertainty, and doubt, or FUD, what happened is they raced in and they paid a couple extra $1,000 because companies like Zillow and other lenders, massive lenders, are hurting so bad. They say, you don't even need to put down 3% anymore. Just please, we'll just put down 1%. That shows the absolute act of desperation on the part of lenders right now. So if you pay and you offer a couple thousand more for the median home price, well, who cares, right? Because you don't even have to put that much down. And what does it really do to the payment? See, that's the thing right there. And out of all those homes, how many people are buying adjustable rate mortgages? My point being is this. Investors are running away, and they're running away fast. It says during the pandemic, investors took advantage of the super low interest rates and bought up homes. This trend continues a 4-quarter-long growth decline in investor purchases that began in the second quarter of 2022, and it's going to get much better. This period represents the second largest drop in purchases since the 2008 recession, following a drop of 48% in the first quarter of 2023. The question is, how big is quarter 3 going to be? It's going to be a big drop. So my point being is this. Take it or leave it. The market's turning, and we are on that roller coaster, and now the roller coaster has more of the train on the downhill slope as the uphill slope. We're starting to accelerate. The only question is, what side of the train do you want to be on? Do you want to be ahead? You want to be at the head, or do you want to be at the tail? All right, guys, the 80% off sale ends today. Put a link down below. Thank you so much for watching The Real Estate Ninja. Oh, wait a minute, hold on. Economic Ninja's got a big story about foreclosure. Zombie foreclosure is ticking up in about 20 minutes. The Real Estate Ninja is out.